But I do think the other commodities are going to turn because they're just very cheap. I don't think gold is expensive. I think those other commodities are cheap. And so I think that the way this is going to mean revert is going to be with the other metals coming up more than gold. I think gold's going to keep rising, but I do think you'll get a bigger rise out of silver, probably out of platinum as well. At some point, these metals are going to move. You've had a lot of central bank buying of gold, and you haven't had central bank buying of those other commodities. But I do think the other commodities are going to turn because they're just very cheap. I don't think gold is expensive. I think those other commodities are cheap. And so I think that the way this is going to mean revert is going to be with the other metals coming up more than gold. I think gold's going to keep rising, but I do think you'll get a bigger rise out of silver, probably out of platinum as well. At some point, these metals are going to move. I just don't know when it's going to happen, but it will happen, right? And oil is going to go up, and agricultural commodities. I think that, maybe the big drop in the dollar is going to be the catalyst for the big boom in commodity prices, and those commodities, catching up to gold. They're not going to catch it in the sense that they're going to, silver's not going to be the same as gold price, but it's not going to be 100 to 1. It could go back up to 30 to 1. And at 30 to 1, that means, silver has to triple, even if gold just stays where it is. But of course, gold's not going to stay where it is. So getting to 30 to 1 is going to be a moving target. Gold, it had one dip below 3,000, and then it made a new high. I think the record I saw was above 3,360. And that was last night. It made a new record. It's pulled back a little bit now, but it's still, it's still above 3,300. So we're 10% above 3,000. I think it's becoming clear to people who didn't see it before that gold is the new safe haven. It's always been a safe haven, but it's the last one standing. Treasuries were thought to be a safe haven, but I always pointed out they weren't a safe haven because they don't provide safety from inflation. And that's a big risk. And the gold provides that. And there were a lot of people over the last couple of years that were misled to believe that Bitcoin was an alternative safe haven to gold, that it was a digital cousin to gold, right? It even better because gold was analog and Bitcoin was digital gold, and digital is better than analog. But I think now people are finding out. Many are still reluctant to admit this, but they will eventually have to acknowledge this, that Bitcoin is not an alternative to gold if your goal is a safe haven or a store of value or an inflation hedge. Bitcoin can be looked at as an alternative to buying a lottery ticket, or buying a penny stock, right, that has no earnings, right? So, it's a way to gamble on something happening, but that's risk. So when you buy Bitcoin, you are assuming risk, right? If you sell stocks and buy Bitcoin, you're going from one risk asset to an even riskier asset. If you sell your stocks and buy gold, that's a completely different story. That's de-risking, right? That's going to something that's safe or stable. And so people are starting to realize that what they thought were safe havens are not safe havens. And so buyers of treasuries are buying gold instead. And maybe buyers of Bitcoin are buying gold instead.
Friends, I don't know if you've noticed, but things are changing drastically, and you don't need to be an economist to understand it. The price increases you see on supermarket shelves, in shopping malls, or at the gas station are warning signs of a massive economic storm brewing in the background. For years, theories about gold and silver were whispered quietly. Now they're being shouted out loud. Economists like Peter Schiff are saying that in the coming years, gold prices will reach historic highs. And it won't be because gold is becoming more expensive. It'll be because the US dollar is losing its strength. Today, as American citizens, let's think about what we really have. Our manufacturing capacity is inadequate, our supply chains are fragile, and our skilled labor force is shrinking. China, on the other hand, has strong production facilities, robust supply networks, and a well-trained workforce. While they hold real products, All we have are money printing machines on paper. Do you really think this situation is sustainable? China is reducing its dollar holdings and increasing its gold reserves. By pegging the yuan to gold, it's boosting its currency's value and increasing the purchasing power of its people. That's why in the near future, we won't just see gold rise significantly, but also silver and even platinum. Maybe you're not noticing these changes right now, but think about this. If the gold to silver ratio drops from today's 100.1 level to 30.1, those who invested in silver will see massive gains. That's because silver tends to outperform gold during times of heightened economic uncertainty. It rises faster and higher, which means if you invest in silver now, your returns could be much greater than from gold alone. So what will happen to the dollar in this process? According to Schiff, the dollar will lose significant value, and this shift will deeply affect our lives in the coming years. That's why now might be the perfect time to reevaluate our investment choices. Remember, economic change always begins with small waves, but those waves can quickly turn into a massive tsunami.
Donald Trump thinks he's holding a royal flush. He's got a busted inside straight, right? He's drawing. He's never going to fill it. He's got nothing. He's got, China's got the cards. Besson says, "Oh, we're the deficit nation." Yes, we are the deficit nation. That's our problem. They say that China wants what we have. What do we have? A printing press? They got a printing press. We want what they have, the products that their factories produce. They've got the stuff. And if you produce it, you can consume it. We can't consume what we don't produce, right? There's more of them than there are of us. There's triple the population. There's almost 1 billion or maybe 1 billion people in China. We got like 340 million. There's no shortage of consumers in China. They got plenty of consumers. What we have a shortage of is factories and supply chains and skilled workers. That's a big problem. They don't have a problem finding consumers for their stuff. Anybody will consume, right? And the way to do that is weaken the dollar and strengthen the yuan. So China can kill two birds with one stone. Dump their dollars, dump their treasuries, dump their U.S. corporate bonds, and whatever dollar-denominated debt they have, buy gold, right? So diversify out of the dollar, peg their currency to gold. The yuan goes way up, and now all the Chinese are enriched. All the Chinese now have a huge purchasing power. They could buy all the goods that they were shipping to us, and we're the losers, right? They just take our purchasing power. Now China's got all the wealthy consumers. We just got a bunch of paper that nobody wants. I think it's difficult. I mean, I think Trump is going to try to dig himself out of this hole by kind of pretending that this is all part of his master plan and it's all going exactly the way he planned it in his 4D chess game that nobody else can understand because he is the greatest negotiator in the world. And none of us could really understand the method of his madness because that's how smart he is. But I think they will announce some deals, with various countries that they will tout as being this major win, but they'll really be insignificant, just cosmetic victories. To the extent that the U.S. and countries reduce whatever trade barriers they have, yes, I mean, that would be a good thing, but not enough to move the needle on the U.S. trade deficits because that's not why we have them. But I do think that we've kind of started a process that is going to take on a life of its own. And as the dollar weakens, it will continue to weaken because currencies tend to trend. The U.S., the foreign markets are outperforming, that will continue. For years, it's been obvious to pretty much any, investment portfolio manager that Europe and Asia had better valuations, that stocks were a better deal.